Hello traders, welcome again to another weekly Forex Forecast. My name is Gabriel Ujimadu and this is Trade Forex with Gabe. So this week we will be looking at market setups and opportunities for May 20th through to May the 24th. Last week, if you traded with us, I want to believe you smiled to the bank. Well, we could do a quick review on them. For those who traded AUD, CAD, AUD, Swiss franc, GBP, AUD, NZD pairs didn't really play out well. We gained some strength on NZD. Euro CAD fine, Euro CHF and Euro NZD, which didn't play out well, but Euro CAD, Euro Swiss franc, all good. And of course, last week also we had CPI data, and we had two scenarios on CPI data. So I gave you both scenarios in case we had a weaker CPI, which is what we had. We'll be trading Euro USD and AUD USD, and those also played out fine. Well, some of those trades are still coming out to be the best pairs for the week, and I will be walking you through so you can sort out which will be the best trading pairs for you this week. So let's get into it, starting off with what the fundamentals are saying for the week. And this week seems to have a lot of high impact news, but on Monday we wouldn't have anything as that's bank holidays. So on Tuesday we'll see CPI data affecting Canadian dollar. So we have the CPI month in month, CPI year in year, and the trimmed CPI data on Tuesday affecting Canadian dollar. And then we'll also see the Bank of England Governor Bailey to speak on same day. On Wednesday, we have interest rate decision to affect New Zealand dollar. That will be on Wednesday. Also, we see CPI data to affect Great Britain pound on Wednesday. On Thursday, we'll see the PMI data, flash manufacturing PMI, also services PMI, German flash manufacturing PMI, and also that of the services sector. All through Thursday, we'll see a lot of PMI data affecting Euro and GBP, and also the US. And on Friday, we'll see retail sales data affecting Great Britain pound and the reversed UOM consumer sentiment data. So all of this, we have to plan our trades around this high economic data, which should impact the currency. But of course, we will also match it up with what the indicators and what the technical price actions are saying. So let's get to the first technical indicator we use, and that's the currency strength meter. From last week, what we have here, we have Australian dollar still retaining some strength on the positive side. We have Euro also gaining some strength from positive 0.1 now 0.5. NZD moving from negative region now to the positive region to a score of 0.6, and we see GBP also moving from negative region to being the strongest into the week. So we have four strong pairs currencies for the week: GBP, NZD, Euro, and AUD, and pairing them up with the weakest, which is Canadian dollar, USD, Swiss franc, and Japanese yen. But I'm going to show you the ones that I feel have the best potentials into the week based on price action. So having filtered them out, I wouldn't be going deeply into the sorting, how I sorted them out. But into the week, what I'm looking to trade on GBP pairs, so there are basically four pairs I'm looking to focus on this week. GBP pairs, NZD pairs, Australian dollar pairs, and Euro pairs. So with all going long on them, GBP, I'm looking to trade GBP CAD, GBP USD, and I'm going to be walking you through what I also think about the United States dollar, because many could say, yes, CPI data came out weak last week, so they want to go all in with a forecast that the dollar will be weak. But I will show you a little bit of what the price action for the dollar is saying, so you should trade carefully and cautiously, on the dollar, because we could see a potential strong dollar again into this week or probably upper week, but I'll walk you through all of that. So NZD pairs, I'm looking to trade NZD CAD, NZD USD, and NZD Swiss franc. And on Australian dollar pairs, I'm looking to trade Australian dollar CAD, Australian dollar USD, Australian dollar Swiss franc. And on Euro CAD, and Euro USD. So let's jump into the technicals, okay, and see exactly how this is playing out. Now, this is the dollar index, okay? And on the dollar index, yes, we indeed last week had a weak CPI, which was really expected from the market. So in all of the weakness of the dollar, notice that we are still trading within the boundaries of this bullish channel. You know, we've been tracking this channel for some time now, over about 4 months back, when we began to see some new rallies in the dollar. So right now, yes, the technical target for this sell-off seems to have been achieved, because that was the breakout from this channel. Also, if you look closely, what we had was like a double top pattern. So this reversal was really expected. So we had a double top pattern. We saw the breakouts, which also achieved the technical target, made a retest, and finally CPI data week, we saw the sell-off towards the lower boundary of the channel. So don't be surprised, okay, if we get a breakout to the upside, because originally we've been anticipating that price should rally towards this high, which is around the 106.885 level. So this is our anticipation, and you could see that that is almost playing out. So what I would like to see to confirm that it's time to go long again on dollar is to see a breakout from this channel. So if price breaks away or breaks out from this channel, then this will be a fantastic time to look for new bullish opportunities on the dollar. So let's look at that. If we're able to set a little bit of key levels, let me give you what this key level is. Just a moment. So this is really big. Just a moment, guys. So what we have here will be around the 104.59 level. So will price break above this level? Let's see how that goes. And will price break below this channel and continue to trim sell off? No one can predict, but my scenario is that dollar, you know, the lower boundary of this channel will hold. This is my personal view of the trajectory in which we expect the dollar to trade. So I expect it to hold and rally further up. So you could plan that, use that info to plan around your trade. But the week holds all the results that we anticipate. So let's go into the pairs for the week, and we're starting with Great Britain pound pairs, and we will look at GBP CAD for a start. Starting with GBP CAD, okay, not there. So let's use the full menu. So GBP CAD, where are you hiding? Just a moment, guys. So there it is. All right, so starting with GBP CAD, and this is the scenario we're looking at on GBP CAD. So originally what I'm just looking forward to is for price to make it to the upper boundary of this channel. So the first, I expect price to take out this last high, because this is already giving us the setup for a bullish structure. We've been having the new high, new higher lows, higher high, new higher lows. So it's expected that price should at least take out this last high. I think it's about 100 or 70 pips or so. Yeah, 55 pips before we make it up to the upper boundary, somewhere around 156. So in case you're trading this, you may need to go down to lower time frames, you know, using your strategy to find where the entry will be. But then you could see some major key levels here. So which, if price is able to make a bounce again, then this will give you a better risk to reward ratio. Then you target the first take profit level, 1.73381. And then the next one is somewhere around here, 1.7 4188. Okay, so let me take this off. That's already showing the upper boundary where we target. Next trade will be GBP USD. Now, don't forget, I'm going to be a bit careful and cautious how I'm going to trade GBP USD pairs. So right now, what I see is that price should make a new rally, and that target is towards the 1.2837 level. But in a case dollar begins to strengthen up, what I would like to see, what would trigger my action will be a break from this channel. Okay, if price should break away from this channel, then I'm trading all the way down towards the lower boundary of this bigger channel we see. Okay, so could touch here, then make a sell-off down, who knows. But of course, with the CPI data and no data we expect into the new week, I expect the dollar to trade sideways, and with that sideways trading means that the pound should gain more strength and make this new rally, at least make a touch towards the 1.28374 level. Okay, so this is my personal bias on USD pairs. Now let's look at GBP Swiss franc. GBP Swiss franc. Now, on this pair, you can see how strong the pound is, really smashing through all of the key level. Look at that momentum. So for what I expect the pounds to do, because this is on a weekly time frame, so anyone trading this has to be on a position trading, or you could come down to lower time frames to find those entries. So on lower time frames, what we're expecting here in this case H4 is that price should make it to the upper boundary of this channel. So in its anticipation, I will like to see some level of correction, and we could measure where that correction should be with Fibonacci retracement tool. So somewhere around the 38.2 or 50.0 level. If we get any correction down to this level, then it gives us a better risk to reward ratio to target our new to target these key levels of 1.1685 level. Okay, so this is GBP pairs. Now let's go to the next pair, which is NZD pair. So we're starting off with NZD card. NZD card, just a moment, there you are. Good. So on NZD card, we're looking for a strong NZD into this week, but don't forget there's interest rates decision coming up, so you have to also plan that. But this is textbook trading. We had a downtrend and we had a failed swing here. You see how price failed to create a new lower low, and now we have the breakouts from this channel. So this downward structure has failed, it's been violated. So what we expect from New Zealand dollar is for further rally to the upside. So in the interim, the technical target right now is 0.8408 level. So this is what my target is, but who knows, are we going to get a sell-off before the interest rates so we can find a good entry towards 0.8408 level, or we just continue to rally up towards this level? Now the target is just about 59 pips, so this is not good risk to reward ratio. So if we're able to get some level of correction, this will be fantastic for me. So using Fibonacci, if we get any correction towards the 38.2 Fibonacci levels, this will be a perfect place to look for entry and target the technical targets of 0.84086 level. NZD card. Now let's move on to NZD USD. NZD USD. Just a moment. There you are. All right, on NZD USD, well, it's been a good ride so far, so I think it's time to delete all of these trades we had. Now, in case you've been following this channel, we had a good time trading NZD USD. All the breakouts was just fantastic, and all achieved their targets, so to say. So right now we have to say goodbye to all of those signals. We traded over 3-4 weeks back, more than about how many weeks now. So going into the new week, right now you can see we have a nice breakout. So the downward structure has been violated, first from the downside where we failed to create a new lower low, and also we've been able to smash through the last high. See that with momentum, fantastic momentum there. So what I expect to see, if this momentum is not sustained, then we should have some level of correction. What I would like to see is a correction into this is always the best place to expect a good correction between the 38.2 Fibonacci level or the 50.0 Fibonacci level. With the interest rate decision we have, just maybe we will have that level of correction. We had a nice momentum over 135.8 pips momentum rally from last week. So it should cool off a bit, give us some good retracement, and this would be a good place to make a new entry. My technical target will be 0.61977 level. Next on the line on NZD pairs is NZD Swiss franc. NZD Swiss franc, we saw it a while ago. Yeah, there you are. So on NZD Swiss franc, see this guy is racing to the moon. What can we say? It won't be good to chase a moving bus or a moving train. For this trade, traders, I would just like you to wait for some level of correction, okay? I don't like chasing a moving train. The target is almost hit. If we're able to get some level of correction, then this will give us a better risk to reward ratio. But right now, this is almost done and dusted. So just for your info, better to wait for some level of correction before interest rate decision, then re-enter. And the technical target is given as 0.5596 level. Let's move on to Australian dollar. And we have three pairs we're looking out on the Australian dollar pairs, starting with AUD CAD. AUD CAD was a fantastic trade from last week, guys. In case you traded with me, we anticipated this bullish breakout. I told you this was a bullish flag, and bullish flags always trades that way. So you see the flag pattern. Once we get a breakout, the full technical target for this is just to do the inverse of the flag, and you see this is where we're headed to right now. So 0.91597 level is the next technical target. And we said last week, if we're able to break through the 0.91021 level, this will present us a new opportunity. And that opportunity is that we are getting a confirmation that this channel has been violated. So what does that imply? It means also we have to get the technical trade targets for this breakout and trade into those targets. And for now, that target is given to be 0.91597 level. So this will be one of my best setups into the new week, okay? To be one of my best setups into the new week. We may get some correction. Let me see if we're able to achieve 50% Fibonacci retracement. Okay, just a moment. Okay, we were able to get up to 38. Now notice that. Let me show you all of that. So we were able to get, after the rally, we got that retracement, that needed retracement into the 38.2 to 50.0 Fibonacci level. And you can see we're already getting the breakout. Another way to get your technical target is to use the Fibonacci expansion tool, where you get the rally and then you measure how far the retracement went, and this is it. So you can also see that the first target is somewhere around where we've measured. Okay, that's 0.9143 and the second technical target. So let me just put this here also. So by Fibonacci, we can extend our take profit for this kind of movement. Okay, so once price is able to break above the last high here, once price is able to break above the last high there, so those are our targets: 0.9143, 0.9159, and 0.9186 level. Okay. Australian dollar card, and we also traded Australian dollar USD because this was one of the trades from last week for a weak CPI. All right, we said we're going to go long on this trade once we get a weak CPI. From the beginning of the week, it was a fantastic rally on Australian dollar. So this is it. This is where we started the week. So CPI data was around here, so which gave us that needed. We got a perfect retracement. Let's see again around 50. Yeah, look at that. Very perfect retracement. Dropped down to the 50% Fibonacci levels, and that was just about CPI data time. And you see that needed rally. We got it. Last on Australian dollar pair is Australian dollar Swiss franc, and I think we traded this also last week. Yeah, Australian dollar Swiss franc was one of our trades from last week, and look at this, guys. We smashed the target and even extended to it above our target from last week by another 37 pips. So this was a fantastic trade again from last week, all the way from the start of the week to the close of the week. Fantastic rally all the way, over 113 pips we made from that trade. And then let's go on to the last pair for the week, and that's those are euro pairs. So we'll be looking at euro card and euro USD. So let's move to euro card. So euro card here, what we see here is a nice breakout. Let's try to get it really nice. So I like getting the channel drawing perfectly well, because it will give you exactly what you're looking for. So on euro card, what we see is a nice breakout. Can you see the momentum, guys? Look at that momentum breakout. On the daily chart, it's much more clearer. Look at the candle. And then we got the needed retracement, that pull back to make a retest of the breakout point. Right now, we're rallying to the technical targets of this breakout, and that's around the 1.48667 level. If we break past that, then the next key target will be the 1.4900. So let's see. We have about 80 pips and 115 pips, you know, into those key levels or key targets. So traders, decide for yourself. Are you going to go in now as soon as market resumes, or you want to wait for some level of retracements before you make that move? So Eurocard, mine is to give you my best opinion on where I believe the market should be headed based on price action and some key indicators, as I have been teaching on this channel. Now, last on the list is Euro USD, and that's the last pair we traded last week for a weak CPI data, and look at that breakout we saw. So right now, again, don't forget, I'm also of the opinion that dollar is going to regain its strength. And if you check closely, it's also suggestive of the fact that, yes, on Euro USD, because we've not achieved these technical targets for these breakouts, the breakout for this channel, I'm still of the opinion, I believe that dollar will regain its strength and we will see a sell-off in the euro. And that target for this breakout, let me recall again, because I did this measurement some while back. So look at the breakout point here. We've had the retracement, a retest, and we still need these targets to be achieved, because it has to be achieved. Okay, and that's 1.03222 level. So let's see. We now have a breakout from this channel, so it should achieve its technical targets, but not so much as to also violate this key high here, because right now, if you look closely, if you look closely, we're also forming like a downtrend here. Yes, also forming like a downtrend. So I am still of the opinion that the dollar will regain its strength and we'll start seeing a sell-off of these pairs, Euro, Australian dollar, and GBP USD, and even NZD USD. So that's why I'm cautioning, just be careful trading USD because we could see a major reversal. All right, this is where I draw the curtain, traders. Until next week, I want to wish you all the best. Have a peaceful week, and don't forget to use correlation analysis, to know what best pair to trade, not just to trade everything that we just analyzed. Okay, until then, if this channel has helped you to be a better trader, don't hesitate to make a comment on it. Invite your friends who also wish to be a pro trader on the Forex market. So this is it from my trading decks. See you next week. Bye-bye.